Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond over at the Contrarian Trader, and what we're going to touch upon today are these topics. The first off is going to be our gold dollar trade, the relationship between the dollar, gold, the gold mining names. Then we'll segue into our continuation breakout trades for the coming week. Then our extreme trades, our extreme overbought and extreme oversold trades, as well as leaving off with members' stock chart requests, where I review the symbols that our members submit for me to review. Then with members, we're going to segue into the week ahead commentary. So members, stay tuned for our strategy session for the coming week. So let's kick things off with the gold trade, and to really do a deep dive into the gold trade and the gold mining trade, you must understand where the US dollar is going, because the price of the US dollar dictates inversely the price action for gold and the gold mining names. Now, yesterday we saw a breakdown on the US dollar below a key support level. It broke a daily uptrend. Now, on a weekly basis, it has yet to break that uptrend, but on a daily basis, a very bearish day yesterday. We closed right at the 50-day moving average with volume that rose sequentially, but was only about average. Stokes are rolling over. MACD, very, very bearish, breaking down with lower lows and lower highs on Williams percentage R. So it looks as though the path of least resistance for the US dollar is to the downside. And I'll probably do a stock chart of the day of the US dollar either today or tomorrow. But either way, I will go over it with members today on the week ahead commentary. And folks, if you're not currently a member, please sign up for our 14-day free trial offer. Or if you just want to watch these videos, just enter your email address. We hate spam too. You will not be spammed anywhere on the website. Follow me on the social media platform that you are watching. All right, so let's go back now and take a look at gold, because we know by and large how the dollar is behaving. It's beginning to break down. So let's talk about gold. All right, so daily basis, gold flashed a bullish key reversal on Friday. And that's after a very, very nasty sell-off from a high of 120.40. And right here, you had a bearish key reversal on the 27th of February. Following day, a hollow or filled candlestick. I always warn members, these two formations are very, very bearish. And sure enough, GLD got clubbed like a baby seal. But on Friday, we flashed a bullish key reversal with the dollar breaking down. It appears as though we are beginning to find a bottom with the GLD, and we'll probably be looking to open up a position this coming week. Members, we're going to go over the weekly chart of gold and the dollar on the week ahead commentary. Nugget, or you can even take a look at the GDX, our play on the gold miners. It rallied on Friday. It managed to recapture and close above the $8 per share level, which is critical support. Now, we did not close at the highs of the day on Friday, so that has me a little bit leery of a continuation move higher on Monday. It may happen, and we'll be looking to build a position on the NUGT. Members, more to come on NUGT on the week ahead commentary. Take note of volume. It was about average on Friday. Stokes are beginning to hook up. So the indicators are implying that we may have a bottom here on NUGT, and that we should look to begin building a position fairly soon. And again, members, we'll talk more about this on the week ahead commentary. All right, now let's segue into our continuation breakout trades. LABU, we've spoken about this one many times in the past. We're very bullish on LABU. On Friday, it retested once again support. It held and it reversed on the day. The path of least resistance remains higher for LABU. Stokes are putting in higher lows. Volume, though, was a bit muted. a bit extended on MACD. That does not mean that we cannot break out this coming week. So LABU, we're very bullish on. We're looking for a breakout of this current trading range. Members, more to come. As LABU, we're extremely bullish on short term. Another continuation breakout trade, SODA, a bit more speculative. It broke out of this bull flag formation. No breakout yet on RSI. Volume very, very light. So while I'm interested, I am not overly bullish on the name because I don't have institutional buyers to support my long trade yet. Right here, I had institutional support. So what we'll be looking for here is some bouncing around, some retesting of what was resistance should now act as support. So we may do a retest of this prior resistance level next week. Then we'll be looking for a consolidation above this resistance level, and then we'll look to open up a position, then build on strength. Next chart up, SNOA. I mentioned this as a short a couple of weeks ago, an extreme overbought short, and we got a correction. At that point in time, we had RSI above 90, and we pulled back. Now we're looking to buy it because remember, many times stocks that are at extreme overbought levels are there for a reason. They have good fundamentals, a good business, etc. So just because I say we're looking to short an extreme overbought stock doesn't mean I'm betting it's going to go to zero. There's a reason why it's strong. So we'll be talking about the weekly chart on the week ahead commentary because that's where the real story is. The daily chart's very noisy, but I am bullish on SNOA for a reason. It's the weekly chart. So members, stay tuned. I like this consolidation along the $6.80 level. We know we have resistance above at $7.25. I think we could break out and above through it. Volume rose to above average on Friday. A very interesting chart. Members, more to come on the week ahead commentary. Next chart up, long, continuation breakout trade. Coach, now we broke out of this triangle formation last week. So really right now, we're just reacting to a breakout. And honestly, the train has left the station. This is just got picked up on my screener today. So what we're looking for on this daily chart is a pullback and a bull flag formation, a stair-step formation. Then we'll buy on that stair-step formation and add to that position on a breakout, much as what you saw here last week. Now, the weekly chart is setting up very, very nicely, and we'll talk about that more on the week ahead commentary with members. Now we're going to segue into our extreme trades. First stock up is NH, Nant Health. RSI 11.35. For you folks reading Technical Analysis for Dummies, and it says that you should buy a stock when RSI goes down below 30, you'll go broke using that rule of thumb. Trust me when I tell you, a stock that trades below $5 per share can easily see RSI below 10. So while we saw some buying on Friday, and how do I know there were buyers out there? This bottoming tail, or wick, implies that at the $4 per share level, we had buyers that moved in and bid the shares off the lows of the day. Volume rose on Friday, but much of that was buying. Again, bid off the lows of the day. What we'll be looking for is a retest of the $4 per share level. We have a possible double top on ADX red, which is bullish for the shares, but it's not time yet to go buying NH. Now, that being said, could it spike higher on Monday morning? Sure, but the risk to reward entry point has not been met for our criteria, and this is what our bread and butter is buying and shorting extreme oversold stocks and shorting extreme overbought stocks. So members, more to come. Next chart up, another extreme oversold stock, GEN, Genesis Healthcare. RSI 13.83, but we can't just use the RSI, right? We need to take a look at the price action. Now, what I'll say is bullish about Friday's price action is the fact that we didn't make a new daily low. It was an inside day, no new daily high, no new daily low. The problem is that they rallied it on Friday, but it found resistance at the $2.85 level. So that's a cause for concern. So I'm not ready to go buying the shares when I know that there are sellers immediately above. We have a lot of overhead supply above. So ideally, from a risk to reward entry point, I'd rather see the shares pull back to historical lows, because I know at those levels I have buyers that are going to help me support my shares. So I don't want to go buying into resistance. I want to go buying into support. That's the best risk to reward entry point. Volume rose on Friday. Bullish stuff. So while the shares have a reason to get pushed lower, I'm seeing reason for optimism as well. So we'll track these shares further, and members will discuss them at greater length. Next chart up, another extreme oversold stock, XPRE, RSI 15.69. So very, very interesting in terms of RSI. This chart here was a classic case of the markets telling you when to sell, because we can say all day long that the markets are corrupt, that they're biased against the small investor, and no doubt that's true with algorithmic trading, no doubt in my mind. You even have the SEC now, which is lining up against the small investor by allowing shares to be traded in nickel increments. I did a Bob's rant on this several weeks ago. Just try to buy Sierra Wireless in a penny increment. You can't do it. It has to be in a nickel increment. So is the market corrupt? Absolutely. But there are times when, and many times, not just one-offs, the charts, if you're using charts, the charts send you signals. And in this case here, we had a high put in February the 1st at 45.66. We pulled back, formed a base, rallied, put in a lower high. And as I always tell members, when you rally back to try to take out prior highs, the question then becomes, do we break out or do we break down? And if we begin to put in a lower high and roll over, you had better have a stop loss order in just below the prior low, because the probability of the trend reversing and going a lot lower is very, very high. So in this case here, you needed to have a stop loss order in right below the 14th lows of February at 42.97. If you had that stop loss order in, you would have taken a small loss if you bought within this trading range, or you would have saved all these profits that you had gained were you long of the shares longer term. Now look at the damage that's been done. A ton of technical damage. These shares aren't coming back for a long, long time. That being said, is there a trade to be had here? Absolutely. So what we're looking for is a base, a support level where we know that there are buyers willing to support the shares. Now, we're not there yet, so I think that we're going lower on XPER. And in terms of price action, the reason why I think it's going lower is because you've had not one day of bearish price action, you've had multiple days of sellers on strength. That's not good. What these shares need to see is a bullish key reversal day. What is a bullish key reversal? This is what I teach members. It's very, very critical that you know this to be profitable in any market. This is a bullish key reversal. This one instance was last seen on September the 15th. A very powerful formation. And look at the rally that was seen after that. So that's what we need to see. And what that candlestick formation implies is that you had buyers below. It was the market telling you that you had buyers below to support your position to the long side. And if you were short, you had better cover, because the shares in all probability were moving higher. So XPER, more to come. Volume is still high. We have institutional distribution. More to come. We'll keep an eye on it in the coming week. Next chart up. This is an extreme overbought stock, FIZZ National Beverage. Okay, so let's begin this commentary off with the fact that I believe that FIZZ is probably going higher. And you may be saying, Bob, you want to short the shares, yet you're betting that they're probably going to move higher. The reason why I say they are is because strong stocks tend to get stronger. I am not seeing signs of selling just yet. We'll drill down to an intraday chart with members on the week ahead commentary to identify any intraday divergences. But as it stands right now on a daily chart, We closed near the highs of the day. Volume was very strong. So you have institutional demand. And you may be saying, Bob, you made the case for buying the shares. What's the case for shorting them? Well, these two lines here, the red line is the third standard deviation Bollinger Band. The green line is your 2 standard deviation Bollinger Band. You get this out of the box trading software. The third standard deviation Bollinger Band is a mechanism that I use to identify unsustainable moves higher. And do you short a stock simply based upon the fact that it's trading above its 3 standard deviation Bollinger Band? No way, because it could simply trade sideways, thus alleviating that condition and then move higher. And you'll be sitting with a short position on a stock that's simply consolidating and will inevitably move higher. But when you add to the equation the fact that you have RSI at 87.52, that is an interesting setup. But the price action, which is critical, along with volume action, is very, very critical. We are not seeing signs of sellers yet moving in to take profits. In fact, volume is telling us that they're accumulating a position. So I think that the shares are moving higher. We will be looking for topping tails, meaning a sign on price that we have sellers moving in. And then we will look to open up a short position on FIZZ. More to come, members. Next chart up, ARNC. This is one. It was an extreme oversold stock a couple of weeks ago, and I said short it. And a couple of members did. I did not. And I got the emails telling me that I missed the boat, and I love the fact that they got short, and I'm happy the fact that I brought it to their attention. So we had RSI at one point in time above 90, and the shares rolled over, and you could see that this was a great trade. We put in a high of $30.69, and we saw a low of $26.27. So congratulations, members, on your trade. But right now, I think that we're probably going to get a counter trend rally higher. We flashed a bullish key reversal on Friday. Do I think that we're going to break out to new all-time highs? I don't know. All I could tell you is this, is that the probability of a move higher next week is fairly good. Volume was light, and we'll look to use a stop right below recent lows at 26.27. Now we're going to segue into member stock chart requests. This is where I review the charts that our members submit for me to review on video. It's part of their membership. And these two symbols were requested by fellow member Chris. The first one up is Naked Brand Corp. NAKD is the symbol. Now you could see that these shares saw a surge on the 2nd of February, and then again on the 3rd, but only to see sellers move in and sell strength. So that was a problem. A lot of technical damage caused by that sell-off, but we put in a base at $2 per share. So this chart here, and this is what I suggest to all members, is to use multi-period charts. Many traders use daily charts, and they're stuck to the daily charts. I suggest eliminating the noise. This chart for me is far too noisy. I need a smoothing mechanism. So what do? Weekly chart. Now the weekly chart smooths out all the noise, and this is what I would do, Chris. I would take my crayon out, draw a trend line down, draw my support level, $2 per share, because we know that if we close down below $2 per share, we need to stop out of the trade. But if we pull back, flash a bullish key reversal, and close back above the $2 per share level, scratch the itch. Open up a small position. When would I buy aggressively? On a breakout above this upper band of resistance. That's what I would do. That's the play. And I like the setup here. But I would avoid using the daily chart. I would use the weekly chart. This is a very volatile stock. But I think that it's looking fairly bullish because we had a good consolidation here, late 16, early 17, then the subsequent move higher. Now it's digesting those gains. RSI is putting in higher lows and hooking back up. Same thing with Stokes. So you have your indicators confirming price performance. Good stuff. Chris's next chart request is DRYS, Dry Ships. What a volatile stock. So the daily chart, much as what we just went over with Naked Brands, very noisy. You need a smoothing mechanism, which is the weekly chart. So let's go through it. Okay, so now weekly chart DRYS. Let's get our crayon out because it tells a really good story. The obvious is that the shares have been in a downtrend for quite some time, but there are signs of life in the shares. But the time is not right to go buying just yet. So as I like to say quite often is that the markets send you signals. And we have a few signals here. We'll begin with the indicators. We have the RSI, which remains in a downtrend, no doubt about it, but you're beginning to see higher lows get put in. In fact, we broke out on RSI above this secondary downtrend line. Not the most important one. This is the most important one, the primary. But it's a signal by the market that the momentum to the downside is waning. Stokes, we have a double bottom setup. These are incredibly oversold. And on price, the downtrend remains, no doubt about it. We did put in a new weekly low last week, but we reversed off of, what was the low? 123 last week on big volume. Now, we didn't close at the highs of the week, so that's a concern. So I wouldn't be a bit surprised to see more backing and filling within this triangle formation. So would I be a buyer of these shares right now? No, but it's becoming interesting. Now, as I mentioned with NAKD, same thing. Rinse, wash, repeat. Same recipe. We're in a trading range. If we get a pullback and on a weekly basis we trade intra-week below the support level, then reverse to recapture it by Friday, end of business, that's a buy signal. And you can scratch the itch, open up a position, and then add more on a breakout above this upper band of resistance. The volume cannot be ignored. That's institutional accumulation. This is a signal by the market. As Investors Business Daily puts it, William J. O'Neill, it's like an elephant entering a bathtub. This is a sign that the markets are giving you that there's accumulation going on by hedge funds, institutions, etc. Members, we're going to segue into the week ahead commentary now, where we'll discuss the health of the overall markets, our positions, and our strategy for trading some of these stocks I've gone over today in the coming week.